For more on this, let's bring in Managing Director from EnergyInc Advisors, Rolake Akinkugbe-Filani. Rolake, always good to see you, my friend. Let's just really talk about, let's start with Nigeria, since we're both from there, and obviously you're in Lagos right now. Nigeria has traditionally had this reputation of being the largest crude oil producer in Africa, but traditionally, especially in the past, it had imported most of its refined fuel. So there was always this imbalance that I think made a lot of people scratch their heads. Obviously, things are changing now with the Dangote refineries, but just explain to us, for not just Nigeria, but African economies in general, this ongoing war in the Middle East, just how is it going to, especially with the Strait of Hormuz effectively closed, how is that going to impact inflationary pressures, currency, standard of living, just higher fuel costs, especially because for a lot of African countries, food and goods are transported mostly by road. So these are countries that are heavily fuel price dependent.
Yeah, thanks. Good to be on the show, Zain. And interestingly, I'm actually in New York at an event talking about the energy transition in Africa, although I'm based in Lagos. So not too far away from you. But look, yes, this story is really a double-edged story. And that complexity is what makes Africa's position so interesting. Nigeria produces roughly 1.5 million barrels a day and had based its medium-term fiscal framework on oil prices between $64 and $66 a barrel through to 2028. So prices above $100 represent, for Nigeria and many other African countries like Angola, Algeria, major producers, it's a fiscal upside on paper. If you think back to the Ukraine crisis, 2022, Nigeria at the time was hemorrhaging money on petrol subsidies that consumed much of that windfall. This time is different. It's also slightly different because the Dangote refinery does supply some of our domestic consumption, but the structural vulnerabilities remain, Zain. And it remains not just for Nigeria, and this is where the human cost comes in. Africa, across board, is a net importer of oil products. It's heavily exposed to shocks. And when you have this situation, oil supplies tighten, prices rise, while African currencies weaken as investors generally move into safe haven assets like the dollar. And compared to other markets where there are alternative heating and transport systems, in Africa, most food and goods across the continent are transported by road, meaning rise and falls costs feed quickly into broader inflation and reduce household purchasing power. So there is the real risk. We saw this pattern some 4 years ago. Inflation on the continent was almost at 14% on average. And that was the first time since 2008. And so we're seeing that. But there's another dimension which is often not talked about. It's that countries like Ghana and Cote d'Ivoire and Senegal are now importing LNG. Qatar has declared a force majeure, and the reason they're importing LNG is to power domestic electricity by importing gas to power. Now, much of that supply has now been squeezed for these countries that have developed import infrastructure for importing gas. But the flip side, it actually positions Africa's gas exporters as a potentially reliable and more secure supply of global gas and oil if we can build the right structures here domestically. So like I said, it's a double-edged sword for the exporters of crude oil, but also for the net importers of oil products.
Rolake, I have read you say in the past that Africa needs to redesign its own risk. How does that apply to a crisis like the one that we are seeing with the war in Iran and the implications that the closure of the Strait of Hormuz has on global oil prices?
Yeah, and I said it, this is the one question about redesigning our own domestic and regional economy. I think it's the one question that keeps African energy policymakers up at night. The honest answer is, for the net importing economies, they need to look at regional integration within the African continent, countries like Kenya, like Senegal, like Ethiopia, that allows them to leverage the refineries that are being built around the continent. The other important point is diversifying away from purely imported fossil fuels. Like, every price hike is a reminder of that structural vulnerability. So we do need to invest in distributed renewables. We do need to invest in grid expansion. For producers like Nigeria, like Angola, like Algeria, the fiscal pressure of this moment means we need to redesign how we attract investment into upstream oil and gas investment to capitalize on the higher oil prices. Many organizations like the Africa Energy Chamber and many governments have consistently argued that Africa's own oil and gas reserves actually represent a legitimate pathway to development. And a crisis like this reinforces the argument domestically. So I think it's really about governments here plugging any domestic distortions and leakages, in accelerating investment in infrastructure, advancing intra-African trade, building resilience and fiscal buffers, right? This is a really great time to build a fiscal buffer around a future shock, because it will come. It may not be from geopolitical risk. It may just be the structural cyclical nature of the oil and gas sector. Now is the time to really focus on domestic infrastructure development and integration.
Yeah, I mean, energy security and diversification for African economies is so important. I mean, especially because, yes, even though technically, I guess, oil producers across the continent might end up making more money, the higher oil prices go, the fact is, if you think about the typical African household, there are going to be massive problems ahead, especially if what the Ayatollah, the new Ayatollah, is saying that this could last a while, the Strait of Hormuz could be closed for a long time, oil prices, according to him, could go up to an unthinkable amount, $200 a barrel. You have to think about ordinary African households, how on earth they're going to cope with what that means for fuel products and the prices of fuel products. Rolake Akinkugbe-Filani, thank you so much. Always good to see you.
And you're just around the corner from us.
Hi.
Stop by the bureau next time. Thank you.